You say the consensus is bearish. What were people most bearish on ex S&P, which is easily observable, in your NYC institutional meetings the last few days? Were there any trends or non-consensus opinions?
Oh, I think the most important question is always to ask, what are people most incrementally bearish on? And I would say people were most incrementally bearish on, drum roll, their own performance.
Really?
So, yes. And what that means
is that after their performance was bad?
No, it's kind of like this. It's like this. It's like I'm a shrink, and Darius is the other shrink, and we sit there and we listen to them lament about the things that we told them, but and kind of like half-heartedly thank us for it, and in some cases really thank us for it. But the reality is that when performance goes negative, that's the most daunting incremental feeling for an investor, because they lose their confidence, they lose their stroke. They lose their, undeniable God-given talent to deliver the alpha. And I can see that in the eyes of people right now. I know it. I don't like it. It doesn't feel good for me either. I don't like seeing people go through painful performance periods. But what I think that's going to do, Ben, is that provided that the fundamentals that a lot of people weren't prepared for, including style factors. Don't forget the captain stock picker may have thought that he had the fundamentals or the company right. But what did that do for you in Restoration Hardware in the last 2 weeks? What did it do for you? Name a stock that's had good fundamentals in the last 2 weeks. What it did for you was absolutely nothing. And this is what I had to learn at a very young age, because as a very young portfolio manager, was that my fundamental thoughts on companies and all the super duper research did fully loaded. 256 one-on-ones with companies in 2003. You know what it meant sometimes when the macro market was trading on its own macro drift? Absolutely nothing. And that's a real hard one for people to get used to. So that's new. But it's not new across the cycle of my career. I've seen this 3 times. This is the 3rd time. And I fear that this time, people can get out of those mistakes less easy. In 2000, coming out of 2000 to 2002, it was a much more liquid market. It was a sell-side market that would put up capital on the other side. If they didn't, we would have Peter Dartley or a hedge trader yell at them, and then we'd fire the sell side. So they would put capital up. In 2007, there was a much more market liquidity you could get. Again, the market wasn't like it is now, with the sell side scared of their own shadow. Today, you cannot get out, and they know it. Everybody knows it, and that's what's incremental. Performance is weakening, and they can't get out.